We had it good. The economy was going so well that we had a hard time imagining anything else coming. Then the COVID virus hit, and it hit the economy hard. The future of some businesses may well depend on how they can leverage tax strategies to raise or at least preserve their cash flow. Hi, I'm David Weiner, Mr. Cashflow. And if this type of video could be helpful to you and your business, please click and give me a thumbs up on this video. And hit that subscribe button at the bottom of the screen to get more videos that will help build your cash flow and your bottom line. Hindsight is always 20/20. Today we can look back and say, well, they should have taken steps to protect themselves when things were good to protect from a possible downturn. But even if business didn't prepare well enough during the good times, they still have some pretty good options to reduce their tax burden quickly now that the tougher times have hit. For most businesses, the first approach would be to search out any losses in order to maximize tax refunds and get cash on hand as quickly as possible. The CARES Act this year has boosted their opportunities, allowing business to carry back losses from 2018, 2019, and 2020 to the previous 5 years. If your company was profitable in 2019, it may have made sense to take extra deductions in 2019. But if you expect a loss in 2020, there are now options to make your possible savings larger overall. These deductions could be taken in 2020 and those losses carried back to 2015 or later when the maximum tax rates were much higher and getting refunds from those higher tax years. How quickly you need your cash should direct your strategy. Here are some steps that businesses should consider in order to maximize their deductions and increase their available cash. Number 1, identify and take advantage of losses. Identify and use losses on property or equipment. This could include inventory that's become obsolete, that you haven't deducted for tax purposes, real estate that's declined in value, or accounts receivable that aren't worth as much as you're owed. This strategy may involve actually throwing away or selling those assets. If the losses are directly related to the coronavirus, there may be an election available to take these losses in 2019 rather than 2020. Secondly would be a cost segregation study. A cost segregation study is a recommended way to accelerate the depreciation on commercial or rental residential property. Instead of depreciating the entire building over 27.5 years or 39 years respectively, a cost segregation study identifies and reclassifies property that has a much shorter depreciation life. An engineering-based cost segregation study can also identify assets available for bonus depreciation, allowing many of the assets to be depreciated 100% immediately. Any losses caused by these additional deductions may, for the time being, be carried back for 5 years as well, potentially causing tax refunds without amending prior tax year returns. Third item is real property improvements. The CARES Act opened up another opportunity for companies, which is qualified improvement property. Businesses can now go back to 2018 and take a 100% depreciation on any work done to improve the interior of commercial buildings with just a few exceptions. Fourth would be fixed asset scrubbing. A good cost segregation study can also help you ensure that you have maximized your depreciation taken before on your assets. Maybe you were eligible for 100% bonus depreciation, but didn't realize it, and you didn't utilize it. Maybe you disposed of assets or parts of assets that never got deducted as a partial asset disposition on your taxes. These small changes in depreciation can add up to big dollars in your pocket right when you need them most. And then fifth, take a look at your tax accounting methods. The timing of assets and liabilities are complicated, with a lot of rules. A good tax professional can help you navigate all the varied rules and strategies. While a lot of tax professionals are also good at tax planning, it's going to cost you some money. Now is not the time to scrimp on your tax planning or your CPA. Their assistance, along with the assistance of a good engineering-based cost segregation firm, will net you far more money than you'll spend by using budget tax preparers. Not all of these strategies will be useful for every business, but it's vital that every business take advantage of every opportunity available to them. Not only as we try to survive and thrive as we emerge from the COVID-19 pandemic economy, but make sure that your business is poised to survive this temporary downturn and thrive as the economy bounces back. It's coming. Really it is. I'd be happy to help you find some of these resources that are a good fit for you and for your business. For a free consultation with me, contact me at the email, website, and phone listed in the video description. And don't forget to subscribe to my videos. Cash flow strategies, after all, it's your money. Keep more of it.